was that we are having a bit of a schizophrenic economy. We have a little bit of up, we have a little bit of down, and that's normal. The volatility will go up as we get closer to a recession. So you're going to see some conflicting economic data as we go, but the overall trends are still not great for the economy, but it's nice to see that little uptick that we had. Hi, everyone. This is Rob Kientz, your host for the weekly market wrap-up, and it is June 9th, 2023. I'm recording this about 9 a.m. Eastern time as I'm out on the right coast for a couple of days, and you can see I'm traveling a different background today. This is just my travel background, virtual background, if you will. We're going to talk about the market, and I'm going to do a little bit of an extended analysis on gold and silver charting for the summer, because the summer tends to be a fade time for gold and silver, fade time for a lot of the markets as people sell in May and go away. That tends to be the phrase. Will that continue with gold this year, or will it be different? I'm going to show you past history of 5 or so years of what's happened to gold during the summer, and as a consequence, usually silver falls pretty much along with it in the general sense. We're going to talk about a little bit of what's going on in the economy with regards to economic data. This is a really light week for economic data, so we'll tell you what's there. The next 2 weeks are going to be a little bit heavier, so we'll spend some more time on that. And I have an interesting story on what's going on in the crypto market, because I think it could potentially affect other things, and we'll get into that. So as we look at the economic data, as I said, light week, we actually had a good print on the the S&P US Services PMI, that is Purchasing Manager Index. That means that purchasing managers or companies that are ultimately going to provide services to the public are very positive over what's going on in the economy. Now, this did fall slightly from last month. We had a positive print last month of 55.1. As a reminder, in these indexes, anything over 50 is considered bullish. Anything under 50 is considered a contraction. We didn't quite reach 55.1 like we did last month, but we have a 54.9. So we're only 0.2 off of that. That's not bad at all. That's a continued positive green shoot for the services part of the economy. One thing that I've recently written about was that we are having a bit of a schizophrenic economy. We have a little bit of up, we have a little bit of down, and that's normal. The volatility will go up as we get closer to a recession. So you're going to see some conflicting economic data as we go, but the overall trends are still not great for the economy, but it's nice to see that little uptick that we had. Factory orders are down slightly. They're up this month 0.4%, but they're down slightly from last month when they were up 0.6%. So a little bit of slowdown in factory orders and the services sector, but not a lot, not anything to write home about. ISM Services Index, which according to Market Watch is the headline. Everything seems to have leveled off, not getting any worse, not getting any better. Most U.S. businesses grew at a slower pace in May as customer demand leveled off, according to Market Watch. A new survey showed the ISM Services Index fell to a 5-month low of 50.3% last month. Now, I just said that it was pretty good. It is still positive, but it is declining a little bit. The Institute for Supply Management Index of service-oriented businesses dropped from 51.9% in April. Numbers above 50% indicate companies are expanding, but the U.S. economy has slowed markedly. So they're still growing. The growth has just slowed, but we're not into a full-on recession mode just yet. Good news for the summer, guys. You got more time to accumulate the assets that you want to hold during the next recession, whatever those may be. The U.S. trade deficit ballooned a little bit to $76.4 billion, meaning we're sending more overseas than we're getting back. That's generally pretty negative for a currency in the long run, although the U.S. being the world reserve currency can keep that up for quite a bit of time, as you can imagine. Consumer credit is down to $23 billion spent this month, although that's a positive $23 billion. And when you add up all the other consumer spend, it ain't great. And despite rising interest rates, people are still putting money on the card because they don't have any choice, or they're putting bills on the card because they have any choice, and they got to pay it back at higher interest rates. That is not a good indicator of the health of the consumer. I've been saying all along the consumer is going to lead the recovery if we have one. They're 72% of the economy, and right now they can't lead the recovery because they're putting everything in debt and they don't have big savings. That's not good news right now. Hopefully, people are looking at gold, silver, and potentially other alternatives to help them during the next crisis. And but with such high credit card spend and such low amount of savings, and with wages rising but slower than inflation, the purchasing power is being reduced. So I think the next couple of years for the consumer part of the economy is going to be tight going into the recession. Depending on how that turns out, it could go from a medium recession to a deep one. I think we could go to a deep one if we're going to clean out all the debt. We'll have to see what happens. On to the news. A couple of big stories for you. Binance U.S. suspends USD deposits, warns of fiat withdrawal. So Binance is one of the big exchanges in the crypto world. The reason I'm talking about this is because the U.S. has taken a decidedly anti-cryptocurrency exchange stance since FTX. Not only that, but a lot of the banks are limiting access to these exchanges. And whether you see that as being a positive or a negative, it definitely means that this part of the market is going to come under a lot of pressure. So if you're a crypto investor, it's something you're definitely paying attention to. Binance.us said the moves are part of efforts to protect customers and the platform amid extremely aggressive and intimidating tactics by the SEC. This story is authored by Martin Young via Cointelegraph.com. Binance.us has announced the suspension of the United States dollar deposits and has notified its customers of an incoming pause to fiat withdrawal channels as early as June 13, meaning you may not be able to off-ramp your money back into the banking system. On June 9th, Binance.us announced that it was forced to take action amid extremely aggressive and intimidating tactics from the United States Securities and Exchange Commission, in their words. The firm noted that in an effort to protect its customers and platform, it is suspending USD deposits. Furthermore, Binance.us is notifying customers that our banking partners are preparing to pause fiat withdrawals as early as June 13th, which would be about 4 days from now. They're not allowing a lot of time for this. That's why Binance said this is extremely aggressive. A quote from a Twitter post by Binance.us, the SEC has taken to using extremely aggressive and intimidating tactics in its pursuit of an ideological campaign against the American digital asset industry, and our business partners have not been spared the use of these tactics. The company added that its plans to transition to a crypto-only exchange, but maintains a 1-to-1 ratio for customer assets. The notice also cautioned that any downtime and processing withdrawals going forward may be the result of elevated volumes and weekend bank closures. So it's Friday. If you're seeing this and you have money and you want to get it out to the U.S. banking system, you might want to do it now because it may be harder later on as more people see this story. We saw that with FTX. And if the banks restrict access. Now, I'm not calling for a run on any exchange, crypto or other. I'm just simply reporting the news there and something for you to be concerned about. Turning to the markets. We have a pretty good market. Gold and silver are doing pretty well as we look at the prices this morning. Gold is about even on the day, down 30 cents to 1978.30. That's very positive. It's hovering right around 2000 so far into the early, late spring, early summer. I'll talk about whether we'll have a gold or silver fade during the summer as we've had in the past, but it doesn't always happen. Silver is down 8 cents to 24.34. Copper is actually up slightly less than a penny to $3.80 per pound. Platinum is slightly down to 1,005, and palladium is trading down to 13.18. Certainly different from platinum, almost got to 3,000, I think, a couple of years ago. The bond market is interesting. We continue to have rise in bond rates, just a slow, steady rise. The 2-year now is up to 4.56% as I'm looking on CNBC, up 0.041. The 10-year, the other benchmark, is at 3.743, up 0.029, still in yield curve inversion. If you've been watching these weekly market wrap-ups, I note that when the 2-year requires more interest rate than the 10-year, it means that bondholders see more short-term risk, therefore demanding more yield or money for their bonds that they're going to buy, the money they're going to lend the bond issuer. Therefore, it means they see more near-term risk, which means they see recession. This indicator has been a very good predictor of recessions in the past. The cryptocurrency market is kind of holding steady given all the bad news. It's still sitting in the 26,000s, Bitcoin, meaning Bitcoin's at 26,744.91. It's actually up $208 today, even on news of the Binance, which is, you're seeing support from the crypto people in their investments. Ethereum is also up $7.41 to 1854.30. Litecoin is up $1.44 to 89.96. Stellar Lumens is unchanged at 9 cents. Cardano is unchanged at 32 cents. Some interesting ones there. We're going to turn and look at the gold market. So let me go ahead and share screen for you there. And then we're going to talk a great deal about the actual gold and silver chart and what I think may happen in the summer. As you can see here, we're in the volume and open interest chart at cmegroup.com. This is the place to get the most updated data on the U.S. market. You can see a little bit of a fade in the overall open interest in gold. That just means there are less overall contracts open. That's pretty typical in the summer. And it could mean we have a little bit of a fade. We'll see if this trend continues throughout the summer. And it could mean a fade in the gold and silver price, unless physical deliveries are so strong that they're telling the traders to keep long even in a reduced position. So just because the amount of open interest is declining doesn't necessarily mean that the market has to fall. because open interest equals longs and shorts together. It just means there's going to be less trading, but you could still have somewhat of a frothy price. Or you could have a big drawback like we've had in some years. We'll talk about that in a moment when we get to the charts. Right now, August is the dominant month for gold trading. You can see here 372,701 open interest at close as of, I believe, Thursday. Yep, that's Thursday's data. We've actually added 1,934 contracts, so August is getting frothy as the month of choice for futures traders in gold. The EFP numbers, which symbolizes the amount of trade from that August contract that may be going over to London hunting for price differences or even physical bullion, is at 3,054. I'm going to bring it up every time because that exchange for physical is very big and indicates the people in America are going to London for exposure to gold. Is that because of gold shortages? I don't know. That information is not transparently presented. We don't have all of that transactional ledger type of data, nor do we have attestations from the traders. They're not going to tell you their position because that would tell the market what they're going to do, and it would allow the market to move against them. So we're not going to get the full story, but you can tell from the general data that people are going elsewhere for gold, which means there could be either too low of a price on the U.S. exchange and they're going for price arbitrage on other exchanges, or there's not enough gold and they want deliveries. There were 512 deliveries as of Thursday. Gold deliveries, I'll get to. This isn't a big delivery month. The deliveries have to come in the current month, where the EFPs you can exchange in a futures month if you want. So there's not going to be a lot of deliveries probably till August. Doesn't mean we won't have any, but we only have 2,494 contracts open for this month and only 3,000 open for the next month. So August is probably when you start to see a lot of deliveries, another big delivery month. But that could be good. Could be just in time for the gold market to rebound after a little bit of fade in the summer by having a nice big delivery month. All right, let's go over and look at the settlement data. This is where we get our pricing. And for the most part, you know, a lot of people in the gold market have this discussion over how spot price is determined. Technically, it's supposed to be a combination of the trading on the London and the American markets. It really doesn't have anything to do with the actual physical trade at like your local coin dealer, even the wholesalers, although those things do affect the data that traders look at. Remember, this is a futures market. So they're looking at future price movements based upon economic data and things like that. Also, what's happening to some extent with supply demand characteristics in gold. And in any case, it was up $20.20 on Thursday's data. Friday won't print just yet because we're in the morning. And for the dominant month for August, it was 1978.60. So there you go. That's pretty close to spot price. I would argue that if you just follow the COMEX, you'll be within $1 or $2 of the spot price at any given time, because for the most part, the futures traders determine the spot price for all intents and purposes, even though technically that's not what people tell you. I mean, that's close enough, and that's why I follow it that way. So that is gold. Let's move over to silver. And silver had a little bit of frothy interest here in June, a little bit more interest there, and we get a little bit of spike there. I think this is a lot has to do with industrial demand. Silver is a bit more of an industrial, well, actually quite a bit more of an industrial metal than gold. Gold is used in things like electronics and certain areas where you have to have a very malleable, in a very tight space with very little amount of metal, high conductivity and high electricity passage. Gold is actually better in that than silver. Silver is a cheaper use when a little bit less malleability, but still very high electrical transmittance. You can use silver for those purposes. Gold and silver are used interchangeably in industry and electronics, communications. Silver is used more widely across the industrial spectrum and the product spectrum than gold. Therefore, we say it's more of an industrial commodity than it has been in the previous 6,000 years when it was used more as money. But since the Industrial Revolution, and more specifically the last 50 or so years, since we've gotten more into the electronics and now the internet age, and now we're pushing out in the space age, silver has become very important. I would call it one of the most critical minerals on the periodic table. As we look at the data, the dominant month is September, not August like it is for gold. Remember, they're not always trading the same in the same month as the dominant contract. We have it in September and we have it in July. July is 89,962 contracts. September is 42,194. You can see that there is quite a bit of movement on both. The EFPs in silver came from the July contract. No deliveries as of yet because we only have 33 open interest contracts for June. June's not a big delivery month for gold or silver, so you're not going to see a lot of big deliveries on gold and silver and the COMEX in these months, but you'll see it in silver probably starting in July and in gold in August, which are the next really dominant months. And you'll see another one in silver ramping up for September, and then you're going to see it ramp up for December as well. December will be a big month for both gold and silver at the same time. Looking at gold depositories, we're going to go back to Gold Charts R Us. Here's the COMEX data summed, and you got a nice little 4-week indicator, 4-week change. Overall, the 4-week change was slightly positive on the COMEX. The total depository went up 45,231 ounces for gold. This section talks about the ETFs and e-funds and those types of things. A lot of this is stored in London, not quite all of it, but this is a pretty good proxy for what's going on in the London market, specifically the GLD issued by SPDR, because that's the one that has the most. You can see the most total weight there. So if we click that and we click the chart down here, we see that gold ounces held is actually slightly ticked up in the overseas market. And that means some gold is starting to come back in. Why? Because gold price is elevated. Although it hasn't really mitigated the amount of gold that came off the exchange. We're seeing some redemptions here. I think as people hold gold and silver and the economy gets worse, we're going to see some more redemptions. But as price rises, those strong hands, the majority of the gold holders getting into it, are going to retain. So you see some coming back on. That'll mute out the price a little bit, especially given the bad economic data. You can see some retailers, smaller retailers who need the money to pay bills, redeem whatever gold and silver that they have. You could see a little bit coming back on the exchange. You can see a little bit fade for that, but I don't think the majority of people are giving up their gold and silver right now because of what's going on in the economy. Looking at silver, overall, a very positive change on COMEX, up a net of 1.3 million ounces over the last 4 weeks. Overall, though, across all the world markets, the last 4 weeks down 3.5 million. So it's different in silver than in gold, as silver has had a much higher runoff of the markets. Gold's had only 273,000 ounces. Silver's had over 3 million runoff over the last 4 weeks when we consider the world stores in both the ETFs, the COMEX, all that kind of stuff, all those types of major exchanges in the Western world. Now, if we look at the iShares SLV chart as a proxy for what's held in London, a little bit of increase in silver since silver squeeze right here. This is silver squeeze. Not much. It's actually kind of faded down. So people aren't turning as much silver. That's because of the heavy industrial component, which keeps silver out of the hands of investors and then people that are going to use it and put it into the economy as well. One of the stories I wanted to talk about was an interesting piece by Jeff Tucker over the Daily Reckoning. Jeff Tucker is considered an Austrian economist, a student of this. He wrote, I believe, Mises.org for a long time. Is considered an honest money advocate. He's talking about the show Downton Abbey. Downton Abbey. Downton Abbey was a show that I loved. I thought it was wonderful because from a historical perspective, I just found it very interesting. I felt like it talked about that era in a way in which somebody that studies history like me would like it. And he's talking about how the British aristocratic life and their relationship with moneyed interests in society. It says, he writes here, perhaps you recall the immensely popular series Downton Abbey, depicting British aristocratic life in a mighty estate, robust at first but fading as the season progresses. And that's the story. He's not talking about the fading series itself. He's talking about that was the story, is the aristocracy was fading over time. We were moving into a new era. At one point, the Dowager Countess Violet Crawley summarizes 800 years of British history in a paragraph. It's the kind of history that is routinely denied to students and has been for decades, but it's a good lesson for political science. She says, for years, I've watched governments take control of our lives, and the argument is always the same: fewer costs and greater efficiency. But the result is the same too: less control by the people and more control by the state, until the individual's own wishes count for nothing. That is what I consider my duty to resist. But wielding your unelected power, asks Lady Rosamund Painswick. Ignoring the swipe, the Dowager answers, see, the point of a so-called great family is to protect our freedoms. That is why the barons made King John sign the Magna Carta. Now, that's true, according to my understanding of history as well. The barons got tired of the king treating the royals disrespectfully and abusing them, so made them sign the Magna Carta. And I'll talk about the Magna Carta and the Constitution here in just a moment and why I'm talking about this story. Going on with Downton Abbey. Surprised, her distant cousin Isabel responds, I do see that your argument was more honorable than I appreciated. And her daughter-in-law Cora, an American in the show, playing an American who doesn't understand what's at stake, specifically for the British aristocracy, answers, Mama, we're not living in 1215. That was the year the Magna Carta was signed. The strengths of great families like ours is going. It's just a fact. The Dowager continues, your great-grandchildren won't thank you when the state is all-powerful because we didn't fight. Now, he goes on to talk about that and whether the aristocracy needed to exist and whether that was a positive thing. And the interesting part of that is those concepts in aristocracy, where the Magna Carta gave the nobles and the barons and dukes all the power underneath the king and equalized the power between the king and the royals, the rest of the royals, or the rest of the aristocracy. how that translated to the Constitution. John Adams, who was the author of the Constitution, said we took the Magna Carta and basically codified in the Constitution. The difference was we removed titles of nobility and we made everybody equal. In other words, they made every U.S. citizen have the same rights that the nobles did, in the old aristocracy. And I find it interesting that we took those principles and just modified them and turned them into our Constitution. Was the Seton Downton Abbey correct about the aristocracy and the check on power? Could the nobles check the power of the king? They certainly did in 1215 Magna Carta, and we certainly have to thank them for that, because that's what led to the founding fathers doing what they did and establishing the Constitution. The Magna Carta is considered the genesis of all our modern freedoms, even though we did a little bit differently than the British did. I think we definitely have to thank them for that part of history. And I think a lot of people in America agree that titles of nobility we don't need to give them, and that everybody being equal is generally a good thing. So I think the Constitution may have possibly improved upon that a bit, but it was from the Magna Carta, and I think that episode was fairly instructive. If we want to live in freedom, we have to check the powers, and the people have to maintain some of their powers. One way to do that is with gold and silver, and I believe that if you own gold and silver, it is one of your checks on unmitigated government power. It's okay to talk about that because we had a revolution for this, and we've been talking about it as part of America for a long time. British culture has had similar. Every culture in the world has had similar. The balance of power, the types of governments, from socialism to capitalism to freedom to less freedom, libertarianism to, those types of things is something we talk about every day. And I think that gold and silver are a part of the people maintaining the freedom. So why I want to talk about it. Now going on to the charts. In gold and silver, we are going to share the charts that I have available for you as we get them pulled up. And this is something that I wrote about in a recent article and I wanted to talk about. Now, is gold and silver, are they going to fade during the summertime? And you can see here, I've got the last few summers dating back to like 2018. Red if gold went down during the summer, green if it went up. Now, I wanted to talk about circumstances here real quickly for a moment. Gold went up in the summer of 2019 because there were concerns of the world economy. That's when China and the U.S. were battling the war of words, if you will. The Trump administration had said, we need to take on China. We need to talk about that. That created some sense of risk in the markets. Plus, there were some fading economic data, which led to gold rising just a bit. The following year, of course, we had the pandemic and gold hit a new all-time high right here. And that shows you that if there are world concerns, gold can go up even during the summer when it typically fades a bit, because the financial markets tend to ease as people go on their summer vacations, and summer months kind of take a break from the financial markets across the world. And it can go up during a crisis like the pandemic. But it has been going down the last 3 years. And you can see this summer, it's gone down a little bit. Now, is it going to fade down as much as it did then? It could. And the support line's right here at about 1650 to 1700, depending on where you draw it. It's right in this area, about 1625 to 1660 range is that support line for this range trade right here. I'm circling right here. The low point, 1700. Now will gold get down there and fade a bunch like it has the past 2 summers, or will fade up? Well, that depends on whether we get a crisis or whether there is continuing weak economic data. You don't have to have a crisis for the gold to go up in the summer. This was just geopolitical concerns and job owning plus some weak economic data, which caused gold to rise quite a bit. Okay, so it doesn't take a lot. What I think is going to happen during the summer? Well, we just had a spate of bank failures. We're having weakening and softening economic data. We're having a little bit of schizophrenic behavior in the economy. People aren't sure which way it should go. We know the consumers are tapped out and taking on tons of credit. We know that debt-based system is getting to the end. Will this summer, will they hold, serve, and rise? It could be, depending upon the news and the overall perception of the strength of the market by the market. We'll have to see. But I don't think the fade's going to be as strong as it may have been in the past couple of summers. I think we could have a fade. But in August, when we get those deliveries on COMEX, it could rise a bit. And if there's any substantive negative news in the economy from now to the end of the summer, I think we could actually get a rise. And that will do it for the gold analysis for this weekly market wrap-up. Thank you for joining me on the weekly market wrap-up. To reset, it is June 9th, 2023. Recording this at about now 9:30 p.m. Eastern Time. This will come out a little bit later today on our channel and on JM Bullion. Wanted to fully recommend JM Bullion as your bullion provider. They do sponsor this program, and they do have a wide range of products, jmbullion.com. And if you go to jmbullion.com/blog, you'll see my writing there as well, where I cover what we have in the weekly market wrap-up plus more. Go visit jmbullion.com. Thank you guys for visiting the channel. This has been your weekly market wrap-up. Have a wonderful weekend, and I will see you again next week.